Hi everybody. Following up from my blog a little while ago, I'd like to clarify some of the parts of it. So I'm going to do this step by step and let you absorb it and think about it. So step one was get clear on your new financial reality. No judgment, no assumptions, just facts. So after divorce, the biggest financial mistake I see women make isn't bad money choices, it's waiting. Waiting because you don't feel ready yet. Waiting because everything feels overwhelming. Waiting because you're hoping things will somehow feel clearer later. Here's the hard truth. Avoidance costs time and time costs options. Lenders don't pause their rules because you're healing. Interest rates don't wait for emotional readiness. And the longer you delay, the fewer pathways stay open. This isn't about rushing into big decisions. It's about getting clear on reality, the reality you're now operating in, whether you like it or not. Clarity comes before confidence, not after. A lot of women tell me, I just need a bit more time to get my head around it. What they really mean is they want to feel emotionally settled before looking at the numbers. But financial clarity doesn't come after emotional certainty. You just need accurate information, not assumptions, guesses, or outdated advice. You don't need to have everything figured out. What income actually counts now? Post-divorce income is rarely as simple as your payslip. Questions that matter. Is child support consistent and accessible, or variable and excluded? Is spousal maintenance temporary, expiring, or ignored by lenders altogether? Are bonuses, commissions, or self-employed income usable yet? Has your work situation changed recently in a way that lenders will scrutinise? So, what you rely on to live isn't always what a bank will accept. And pretending it is doesn't make it true. What debts are still legally tied to you? You need to know these things. This one catches a lot of women out. Just because a debt was assigned to your ex in a settlement doesn't mean lenders automatically ignore it. Or if your name is still on the mortgage, a personal loan, a credit card, or a guarantee, it may still count against you until it's refinanced or discharged. Emotionally, you might be done. Legally and financially, the bank may disagree. So, what settlement funds or equity can you actually use? Not all settlement money is immediately usable, and not all equity is accessible. You need clarity on when funds are available, not just promised, whether money is cash, super, or tied up in property, how lenders treat retained equity versus cash savings, and what costs, stamp duty, legal fees, refinancing fees, will eat into it. Headline numbers are meaningless without understanding what's usable and when. So what lenders will really assess may not be what you hope they will. Hope is not a lending strategy, unfortunately. Banks assess risk, stability, serviceability, and history. They do not assess how hard your year has been, how responsible you intend to be, how unfair the divorce was. Different lenders interpret the same situation very differently, which is why guessing, Googling, or relying on my friend did this advice can quietly sabotage your options. You don't need to be ready, but you do need to be informed. This step isn't about committing to a loan, buying a property, or locking yourself into anything. It's about removing uncertainty. When you know where you stand, what's possible, what's not possible yet, you regain control. And control is often the first thing divorce takes away. I know. You don't need emotional closure to start planning. You don't need certainty about the future. You just need clear and accurate information about your new financial reality. Because once you have that, every next decision becomes calmer, smarter, and far less scary. So here's to the first step in regaining your control. Hope you have a great day.